Hey, let's chat today about your credit score, what it means, and how to boost it. Your credit score is one of the biggest parts of your mortgage application and can have a major impact on your life if you don't manage it correctly. What is a good credit score? Credit scores in Canada are a 3-digit number that range from the high 400s to the perfect score of 900. A good score is generally anything over 680. An excellent score is generally anything over 720. We can get mortgages for people with any credit score, but what changes is the amount of down payment needed in order to get approved. To be approved with the minimum 5% down payment, you need a minimum credit score of 600, but most lenders want to see a score of at least 650 for one applicant. With a score under 600, you'll need at least 20% down to get approved for a mortgage. Is there a minimum amount of credit I should have? Yes. Your credit score isn't everything. To get approved for an insured mortgage today, you also need a minimum amount of credit that we call the 222 rule. This means you need at least 2 lines of credit, like a car loan, credit card, each with at least 2 years of good repayment history and worth at least $2,000. How can I increase my credit score? Here are a few things you can do to boost your credit score. Don't apply for too much too fast. One of the biggest mistakes we see is people going shopping for a vehicle and get 10 dealerships to pull their credit to see what they qualify for. This is the quickest way to see your credit score take a nosedive. If you're looking to add credit, be aware of how many places have pulled your credit in the past few months, and make sure it's no more than 1 or 2 times in the past 30 days. Make sure you make your payments on time every month. Your repayment history is a huge factor in your score, and this includes your cell phone bill. Make sure you know what you owe and pay your minimum at least a week before the due date to make sure the payment is added to your account on time. Keep those balances low. Try to never owe more than 50% of your limit on your credit cards or line of credit. For example, if your credit limit is $5,000, try to never owe more than $2,500 on that one card. This helps what is called your credit utilization ratio. Ideally, you pay every card down to $0 each month so you have the best utilization ratio possible. Don't close those old cards. It's a myth that you should close credit cards that you aren't using. Having less credit available throws your credit utilization ratio out of whack, and keeping cards that you've had for years boosts your active credit history. You're better off keeping those cards open, using them once every few months to keep them active, and pay them off to zero again. Pay those old collections. Whether you think you should owe the money or not, old collections will haunt you forever. You'll need to pay them eventually, and you can't get a mortgage with unpaid collections. So use some of your down payment savings and get those paid off ASAP before they cost you even more in interest. Monitor your credit monthly. The best thing you can do for your credit is to be aware of it. Sign up for free services like Borrow Well or Credit Karma to get credit score updates each month. You can also check your report at Equifax and TransUnion to make sure there aren't any errors on your credit report that might be affecting your score. If you have any questions about your credit or want to see if you qualify for a mortgage, please get in touch by emailing us at team@illuminatemortgages.ca.